Look, we're in the middle of a massive shift in how money and technology work, but most people, they're sitting on the sidelines thinking it's either too late or way too complicated, and I'm here to tell you they're wrong. In this video, I'm gonna be your no-nonsense guide to the crypto heavyweights. We'll talk Bitcoin, we'll talk Ethereum, we'll talk XRP. We'll break down what they do, what they're really worth, and how you can get started as a smart investor this year. By the time we're done, you're gonna know more than 99% of the people out there. I've been down the crypto rabbit hole for years, and I have learned the hard way that chasing hype, it gets you nowhere. Understanding what you're actually investing in, that's the name of the game, and that's the whole game. So if you're ready to finally get it, let's get into it. So let's start off with what is crypto anyway? Before we start talking about the big names, let's get the basics down first. What are cryptocurrencies? What is the blockchain? Let's cut through all the jargon. At its heart, cryptocurrency is just digital money. It exists only online, and it's secured by something called cryptography, which makes it incredibly difficult to counterfeit. But the real game changer is the technology that it's built on, which is called the blockchain. Imagine a digital notebook that's copied and it's spread across thousands of computers worldwide. Anytime a transaction happens, let's say I send you 1 Bitcoin, it gets recorded as a new entry. But here's the cool part. Before that entry's locked in, a huge network of computers, they all have to agree that it's legit. And once they do, it's added as a block to the chain, and it's there forever. It can't be changed or deleted. And that's what makes this whole system super secure and transparent. No single company, no single bank, no government is in control of it. It's completely decentralized, run by its own community, and that's the big idea. It's a way to track ownership and payments without needing a bank as a middleman. Now that we've got all that covered, let's talk about the king of crypto, Bitcoin. Whenever someone says crypto, Bitcoin is probably the first thing that comes to mind for most individuals. It kicked everything off back in 2009, and it's still the biggest and most famous of all the crypto coins that are out there. The easiest way to think of Bitcoin is as digital gold, and here's why that fits so perfectly. First of all, Bitcoin is scarce, just like gold. There's only so much of it that will ever be mined, and there's actually a hard limit of 21 million Bitcoins that will ever exist. That's already baked into its code, so nobody could just fire up a printer and make more down the road. And that's what really makes it a powerful shield against inflation. While governments can print endless amounts of money, they can devalue their currency, Bitcoin's supply is fixed and it can't be debauched like a country's currency can. Second, it's incredibly secure because it's decentralized. Bitcoin runs on a system called proof of work. In the most simplistic terms possible, a global network of really powerful computers, or miners as they're referred to, they're all competing to solve a really complex math problem. The first one to solve it, they get to add the next block of transactions to the chain, and they earn a reward of a new Bitcoin. Takes a lot of energy, but that's what makes the network so tough to attack. Now, as we look at the investment potential for this year and beyond, Bitcoin's investment case is all about being a long-term store of value. We are seeing huge companies putting Bitcoin on their balance sheets. And with the launch of these new Bitcoin ETFs that are now out, it's now easier than ever for even traditional retail investors or even retirement funds to get in on some of that action. This institutional buy-in is a massive vote of confidence. And while the price can jump around day to day, many analysts are watching its long-term upward trend. And with the current price holding strong in that 110 to 120 range, some projections see it testing previous highs by the end of the year. I've heard some people calling for 200,000 plus by the end of the year. So for an investor, Bitcoin is seen as the bedrock of the crypto world. It's the foundational asset that you can build a portfolio on. Up next, we're going to talk Ethereum. So if we think of Bitcoin as digital gold, you should think of Ethereum as a global decentralized computer. When it came out in 2015, it basically looked at blockchain technology and asked, what if we could do more than just track money? And Ethereum's superpower is something called smart contracts. A smart contract is just an agreement written in code that automatically runs itself. Imagine a vending machine. You put in crypto, which is the payment, and the code automatically gives you what you paid for. You get a digital asset, you get a service, you get a token. There's no cashier needed. This one idea blew the doors open for, well, pretty much everything. Smart contracts are the engine behind decentralized finance. So there's this entire world of financial services, lending, borrowing, trading, all done without a bank. NFTs, or non-fungible tokens, that's that unique digital item that you prove you own something, whether it's art, a collectible, a ticket. You may remember those apes or rocks from back in the day. Smart contracts handle the ownership, and they can even pay out royalties automatically. And there's also decentralized apps. And these are apps that run on the blockchain, meaning they can't be shut down, they can't be censored by the government or by any single authority. So Ethereum's the platform where most of the new Web3 internet is being built. It's the busiest blockchain by a long shot. If we look at the investment potential for this year and beyond, Ethereum's value, it's tied to its use. So every single thing that happens on its network costs a small fee, paid in ETH. A piece of that fee is burned or destroyed forever, which slowly reduces the total supply, and it can actually push the price up. Ethereum also upgraded to a proof of stake system a few years ago, which made it way more energy efficient, way more scalable. It actually uses 99% less energy than mining Bitcoin, which is pretty impressive. With institutional interest in Ethereum ETFs now growing because some of those launched in 2024, analysts, they're pretty optimistic. And with the price currently somewhere around 4,000 to 4,500, there's forecasts suggesting it could push towards the 5,000 mark pretty quickly. And a lot of people are now looking at the relative returns of Ethereum versus Bitcoin, and it's been doing a good job outperforming Bitcoin as of late. So for investors, a bet on Ethereum, it's a bet on the future of this decentralized economy we've been talking about. Okay, let's move on to number 3. Let's switch gears and talk about XRP. If Bitcoin is gold and Ethereum is a computer, XRP is a specialist tool designed for one job: making international payments ridiculously fast and cheap. The company connected to XRP, Ripple, they're trying to fix the old clunky systems banks use to send money across borders, like SWIFT, S-W-I-F-T. That system can take days and it can cost a fortune. A transaction on the XRP ledger takes about 3 to 5 seconds and costs next to nothing. So how do they do it? Well, instead of miners, the XRP ledger uses a small group of trusted validators to actually confirm those transactions, and that makes it incredibly efficient and incredibly quick. For a bank, this is huge. They can actually use XRP as a bridge currency to swap between different currencies instantly without having to keep massive piles of foreign money sitting around. Now, if we look at the investment potential for today and beyond, XRP's investment case is a little bit different. Its value is closely linked to 2 things: regulatory clarity and being adopted by big financial players, big financial institutions. For years, XRP was in a legal battle with the SEC. Ripple scored a major victory in 2023, which brought a lot of interest back to the coin. But it's important to remember the case, it's not fully closed just yet. We're still waiting on final court approval on the settlement, and that's still pending. So XRP is seen by many as a bit of a wild card. It's definitely the riskiest of the 3, but it probably has the greatest upside. Its success depends on whether banks and payment companies actually use the XRP token itself, not just Ripple's software. So following the positive legal news, XRP has seen a very strong recovery, price probably somewhere around $3, and it remains a top contender in the market. If Ripple keeps signing up partners, the demand for XRP could really take off and go to the moon. Now that we've talked about the 3 biggest players, Bitcoin, Ethereum, and XRP, let's talk about how to actually invest in them today and going forward. How do you actually buy them? It's honestly easier than you might think. First of all, you have to pick a reputable crypto exchange. And these are kind of like the stock market, but they're for crypto. For beginners, I think places like Coinbase or Binance, which are 2 of the biggest, they're great because they're easy to use and they have strong security. Robinhood tends to be one that's available for retail investors as well, and some people like the way that one allows them to buy and sell their crypto. The second thing you need to do is you need to set up an account on one of those platforms, and you need to do their identity check. And that's just a standard process called KYC, or Know Your Customer. Third thing you do is you actually put money into the account. So you got to make a deposit, and you can normally link your bank account or debit card so that you can fund your crypto wallet. The fourth thing you do is you actually buy your crypto. So all you have to do is navigate to the Bitcoin, Ethereum, or XRP page, type in how much you want to buy, click the button, and you're in. Very simple. Now here's a pro tip for beginners. I always recommend dollar cost averaging your way into some of these assets because some of them might be elevated and they may pull back. So instead of trying to guess the perfect time to buy, you just invest a set amount on a regular schedule, like $100 every Friday or whatever it might be. That's going to smooth out the ups and downs, and it's going to help you to build your investment over time without all the stress. Now, if you're one of those people who isn't interested in setting up your own crypto wallet through a Coinbase or a Binance, there are ETF options as well, and you can get into spot Bitcoin or spot Ethereum ETFs. It just doesn't exist yet for XRP. The next question I get from interested clients is, how much should I allocate into crypto, whether it's Bitcoin, Ethereum, or XRP? And I tell them I view crypto as a speculative asset class. It's a speculative investment. That doesn't mean it's bad. It just means you have to put in the right amount and you have to limit yourself. And the way I view anything that would be considered a speculative investment is you allocate to that investment as much as you're comfortable losing, okay? You have to ask yourself, if this thing goes to zero, if I lose all of my Bitcoin or Ethereum or XRP, how much am I willing to tolerate? And for me, someone in their 40s, for me, that might be 10%. Because the way I look at it is if I allocate 10% of my liquid net worth into crypto and it all goes to zero, I've still got 90% of my money working for me for the next 20 plus years. So I'll be okay. I'll figure out how to make it back up. For somebody who might be 50 or 60, maybe that's closer to 3%. For someone who's 70, maybe it's 1 or 2%. So you need to figure out how much you are willing to allocate into that speculative bucket and just limit yourself there. If you do that, it can be a great addition to your portfolio. And there you have it. You are no longer on the sidelines. You are now educated on Bitcoin, Ethereum, and XRP, more than probably 99% of the world's population. Bitcoin, that's the digital gold. It's your long-term store of value. Ethereum is that innovation factory, the platform for a new kind of internet. And XRP, it's the specialist. It works to make money move as fast as information can. The opportunity here in crypto, it's still massive. But getting ahead isn't just about luck, it's about knowing your stuff. You took a huge step today just by watching this. You're already way ahead of the curve. If this guide helped you out and you want to keep learning, do me a favor, subscribe to the channel, hit that notification bell, like this video. I'm going to be breaking down more of this so you can navigate the market with confidence. What's the one question you're still stuck on? I'd love to know. So drop it in the comments below and I'll do my best to get back to you. Thanks for watching. See you next time.